Hello, traders. Dale Pinkert at Forex Stop Hunter. You could always find me at forexanalytics.com and our FACE webinar as well. I'm also a mentor. I teach people on Saturdays in the Eagle's Nest. You can reach me on Twitter at Forex Stop Hunter. We have the ECB tomorrow, so it's going to be interesting to see what the ECB comes out with. You know that I've been looking for a bounce in the euro. We certainly had one. So the question going into the ECB is, does it continue, or was this enough before we start to sell off and break down under this double bottom? To me, it looks like really the euro to sustain this advance now that we're no longer oversold would have to close back over 113. I'd go with the action over 113. That says that we are going to test the 114 level. Back under this, it looks like about 1250, 1260, which is a bit of a breakout, would be labeled as a false breakout and breakdown, and that could be the catalyst for what happens tomorrow on the ECB. Just a little coaching, really, to speculate on a reaction to a red event like the central banks is more like roulette, betting black or red for a binary bet than trading. So I prefer to let the market react and then react to the reaction with my technical areas. The next market I want to cover, and that's going to be important for the S&Ps. We are rolling over. We're finally showing momentum divergence. If the dollar starts to turn up in a big way, it's going to be a negative for the market. So if we are to extend this, we're going to need some more dollar weakness and head back towards that 96 level. If that doesn't happen and we just move sideways here to a shade under the 97 level in the Dixie, and we're going to start breaking out over 97.80, that is not going to be friendly for multinationals exporting. And the market's lower today with fears of a trade war in Europe when the one with China hasn't even been settled. So we've had a larger than expected magnitude recovery than I thought was going to happen. I thought we were going to start rolling over 100 handles ago in the S&Ps at fib retracement levels. But I think they've worn out most of the bears here. I certainly know it. My account knows it. But it doesn't mean that I'm not going to take advantage of a signal should it occur. And one signal that we're getting that I think people need to pay attention to, and I know we've had a couple false starts, but when you go to the VIX right now, and I believe it's a 4-hour chart, you can see we're threatening this moving average. And there was some type of spike or ghost low here a few days ago. Not much trading done on this wick. So sometimes they'll sell into a market so they could really buy into it cheaper. That may have happened on a very thin volume, but we're recovering back towards 1420. And if you could see, anyone who had stop losses under these lows are gone. So be alert. This may be the real move. I thought this was going to be it. Did not expect this amount of a retracement, but to be there for the good times, you have to be there all the time. Remember, don't just count your pips, count your blessings. Dale Pinkert at Forex Stop Hunter. Adios.